New listings are flooding the Silicon Valley market faster than buyers can absorb them. Yet the median sale price has still shot up by almost 14% since the start of the year. It is a complete housing market paradox. The classic rule of supply and demand dictates that when active inventory surges, prices are supposed to cool down. But right now, across the peninsula and the South Bay, the exact opposite is happening. Inventory is experiencing double-digit growth, yet prices are steadily climbing. In this video, I'm going to break down exactly why this inventory explosion is a dangerous trap for uninformed buyers and overconfident sellers. I'm going to translate the conflicting data from March of 2026, and I will show you the exact expensive mistakes you will avoid by understanding the brutal math behind the latest market data. To understand why the money is moving the way it is right now, we have to look at the macroeconomic whiplash we just experienced. Over the last 4 weeks, the interest rate spiked by 0.5%, dragging the cost of borrowing right back to the painful levels we suffered through in September of 2025. This overnight increase in the cost of capital has severely damaged consumer confidence, especially for mid-tier buyers who rely on high-leverage financing. At the exact same time, the news cycle is dominated by conflicting reports about the new AI economy. On one hand, the artificial intelligence sector is minting new millionaires who are liquidating stock and buying up premium real estate with all cash. On the other hand, we're seeing quiet tech sector consolidations, shadow layoffs, and plateauing enterprise budgets that have the broader tech workforce incredibly anxious. And some layoffs are not so shadow. Think about the recent Oracle 30,000 job cut announcement. This macroeconomic tension is dictating local buyer confidence. The cash-heavy buyers are largely immune to rate spikes. They are aggressively deploying their capital into hard assets like Silicon Valley real estate to hedge against broader economic uncertainty. But the entry-level and move-up buyers are feeling the squeeze. This creates a deeply fractured environment where money is flying towards quality, certainty, and immediate utility, while completely abandoning anything that requires patience, renovation, or vision. Buyers are exhausted by the cost of borrowing, and the sellers are holding out for the absolute top of the market price. It is a high-stakes standoff. Let's look at the hard data here in Santa Clara and San Mateo counties. The median sale price is following a typical seasonal upward trend. We're up 2.6% year over year and up a staggering 6.3% month over month. Year to date, prices have grown by almost 14%. It is a good news for existing homeowners. Sales volume is robust. We saw 1,448 homes sell. That is a 4% increase from last year and a massive 35% jump from February. New contracts, the number of accepted offers, are up 6% year over year. Buyers are out there, and they are ready to snap the best homes on the market. But here's the critical inflection point that you need to pay attention to. Buyer activity is fundamentally falling behind the pace of new listings. Active inventory has ballooned to more than 3,000 units. There is a 13% jump compared to last year, and a massive 30% explosion from just last month. We haven't seen an inventory dump like this in recent memory. But here is the dirty little secret behind that 30% surge. It is not all brand new inventory. A significant portion of this growth is actually recycled inventory. These are homes that failed to sell earlier this year or late last year, were taken off market, and are now being relisted as new to trick the algorithms and lure in unsuspecting buyers. Yet despite this surge in listings, the months of supply remained stubbornly flat at 2.1 months, which remained unchanged from February, and only a slight uptick from 1.9 months of inventory a year ago. The median time on the market remained completely unchanged at 9 days. The absolute best houses are still flying off the shelf in a single weekend. But the average time on the market jumped from 17 days last March to 22 days today. Here is the translation. The median metric tells you the story of the winners, and the average metric tells you the story of the losers. The flawless homes are selling after the first open house weekend and keeping the supply metric compressed. The flawed homes are sitting, accumulating days on the market, and dragging the average up to 22 days. Every home will eventually sell, but on average, it is taking significantly longer to find the right buyer because the buyers are no longer willing to compromise. While the combined data shows a unified front, the reality on the ground reveals a subtle split between two regions. On the Peninsula, proximity to venture capital hubs and legacy tech headquarters keeps the high-end markets insulated. Sellers in Palo Alto, Menlo Park, and Burlingame still hold total leverage because land scarcity there is absolute. However, the South Bay is absorbing the brunt of that 30% inventory spike. Areas down south are seeing more entry-level and mid-tier inventory pile up on the market. Because of this, the leverage in Santa Clara County is slowly but surely transferring to the buyer, specifically the buyer who is willing to look past the shiny staged objects and target the homes that are crossing that 3-week threshold. Zooming in from the spreadsheet to the streets, the psychology at open houses this month is incredibly tense. There is a massive, growing chasm between buyer and seller expectations. Sellers are looking at the persistent price growth and assuming their deferred maintenance property is worth a premium just for existing. Buyers are looking at the half-point rate spike and refusing to subsidize a seller's laziness. We're seeing the ultimate manifestation of the turnkey premium versus the fixer-upper penalty. If you list a home in Cupertino, Mountain View, or Menlo Park that is completely remodeled, staged to absolute perfection, with clean disclosures and a new roof, you will have 5 aggressive offers by Tuesday. Buyers are paying a massive premium to avoid dealing with contractors, supply chain delays, and permitting nightmares. But if you list a home that needs $100,000 of work, you are going to get hit with the fixer-upper penalty. Buyers are discounting these homes by $300,000. They are brutally penalizing properties that require their time, their vision, and their liquid cash. If you are a seller right now, you need to look very closely at that surging inventory. You are now competing against 3,000 other homes. My brutal advice to you is this: you cannot price your home for the market you want. You must price it for the market you are actually in. With average days on market creeping up to 22, overpricing your home by even 2% will immediately turn your listing into stale inventory. You must prep your home to absolute perfection. If your property is not turnkey, you must aggressively undercut the recent comparable sales to induce a bidding war. Do not test the market right now. The market will test you, and you will lose. And if you are a buyer, do not let the headline price growth intimidate you. Your hidden leverage this month lies exactly in the gap between the median 9 days on the market and the average 22 days on the market. Because of that 30% inventory spike, there is a growing pile of homes sitting on the market past week 3. The sellers of those homes are panicking because they expected to sell in a single weekend, just like their neighbors did. But to find the real deal, you must look at the complete listing history of a property. Do not trust days on the market number you see on your favorite real estate app. Because so many sellers are playing games by canceling and relisting, a home that claims to have been on the market for 5 days might actually have been struggling to sell for 5 months. When you trace the property's history and uncover its actual cumulative time on the market, you expose the seller's true desperation. that is exactly where you have to make your move. Do not rely on generic online algorithms to tell you if a property is priced correctly or if a seller is ready to negotiate. If you are tracking a home that has been sitting on the market and you want to know exactly how much leverage you actually have, I want you to request my stale inventory hit list. I run a weekly forensic breakdown of homes in Santa Clara and San Mateo counties that have crossed the 22-day threshold, including the ones hiding their true days on market through relisting tricks, mapping out exactly how much power you have to negotiate a brutal discount. Reach out to me directly. My contact information is in the description of this video. This is Michael Tallis with the Tallis team. Till next time.